What's up, traders, and maybe even some of you future traders, welcome back to the channel. So I was doing my June day trading recap on my intraday momentum small cap gap and go strategy, and I realized that a lot of the things were pretty consistent, but there's one thing that I'm doing that I continue to do over and over again that I need to stop doing, and that is deviating from my strategy and doing things that just aren't exactly right. They're just not things that make me money. They actually make me lose money. So today I want to talk about I have my hand in my face, 5 specific trades that are on both tail ends of the bell curve spectrum. So we got a few of those 5 trades on one side and then several more on the other side of the losses. And a lot of those come by doing things that are outside of my strategy. So in this video, for the June recap, I really want to focus on what I'm doing wrong that I can remove, because oftentimes with trading, less is more, and that's what it's all about. We can quickly start by giving you guys a good overview. This is the pretty much 2 years exactly now, because we started in June is when we switched over to this, but I only traded very, very small size. I still only traded like 2-3 trades a day, because that's when we just got done with the 25K challenge. So I was using a cash account, and then we switched over to the unlimited account. So really the beginning of July 2020, so COVID summer, was when I went unlimited. And you could see here I just kept on increasing my size, and I actually hide the nominal P&L quickly. And then we kind of got into a bit of a slump where I was having some growing pains, and my growth went from exponential to a bit more linear. And right now we're in one of the slowest bear markets for trading that I've experienced. And remember, I've traded further along ago in the past, like 2014, 2015, 2016, but it wasn't my main focus. It was something I did every now and then. Now it's really one of my main focuses. So I was really ready this year to start really scaling the size, but then we entered the bear market. A lot of the gappers, stopped. There was months where we just only saw like 30-40% gappers at best. So it was really slow. I can't wait to start sizing up again. I'm already doing it now, and it's working a little bit better. It feels like there's a lot more steam in the market slowly coming in. Quickly, I'll show you guys what my stats are overall. This is my stats page for those last 2 years, and then right here is for the last month. So last month I made 7.3 really $1,000. I had a pretty good win ratio, a bit more than normal. Usually my normal is like 67%. That's pretty nice, but my average position cost here is a little bit smaller. Mostly because I'll take a lot of scratch trades, I'll get partial fills and stuff like that. I really did start sizing up. I think one of my trades was almost $30,000. So I do have a few bigger winners. And right, once the market heats up, once I'm in a winning trade, once things start looking a little bit nicer, I'm in a flow, I like the tickers, that's when I'll start sizing up. But like I said, from literally Q1 and most of Q2 this year has been very slow for me and just the overall markets. And it seems like that's the general consensus as well from all the traders that I talk to. The only other thing is my average win and then my average loss ratio. So basically my risk reward ratio is very unfavorable. It's quite negative, but that's fine because of a higher win ratio. But I really need to work on holding my winners longer. And pretty much what I said about that in my notes when I was doing the June recap is I got to hold my winners longer. Am I still in trend? So what I mean by that is, am I still in the front side? So is the ticker still trending up? If yes, hold. If I'm nervous, try just closing some of the size. Oftentimes I close right before the breakout, and there's no reason for it. I think a lot of people do similar mistakes, and it's very frustrating, especially if you later chase and then lose profits just because you got out and got scared before. So it's really like trading based on fear as opposed to your strategy, and it definitely happens to me more than it should. So I think if I clean up that one thing, I could probably make a massive improvement in my bottom line. And that's because not just the trade itself that'll probably make a lot of money, but it's also because that gives you more confidence, and then you start sizing and it has a ripple effect. So I think this is my biggest issue that I need to work on. I don't think I'm doing anything wrong when it comes to cutting my losses. I kind of like my general consensus on that at the moment. Basically, breakout or bailout, or if a ticker doesn't work anymore, got to cut the position. Actually, I'll show you guys really quickly here before we move on. This is a pretty interesting summary. If you go back down to the insights page and you just see the intraday duration, you can see I make the bulk of my profits, because there's red trades in here too, but I make the bulk of my profits below 2 minutes, and then after that it's pretty red from there. So I really don't want to be holding trades very long. Breakout or bailout. I'm a momentum frontside trader, so there's really no need for me to hold a ticker or a position for more than 2 minutes. It just doesn't really make any sense. Maybe sometimes it does, but I want to be selling to strength and then rebuying. I'm not averaging in higher, although I would like to do that as the market heats up again. It's not something I don't want to average into my positions in a weak market. I'd rather take my base hits very quickly. So that's a little bit more tuned into the current market that we're in. Now let's get into those trades. And the reason I wanted to talk about these 5 trades with you guys today is because of this. And let me just scroll in here a little bit more. This is just mind-blowing to me. I do this every single month now for maybe or around a year, where I trade the range and I trade backside, but every month, those 2 strategies I lose money on. There was a time where backside was my bread and butter, and I think that's why I'm a little bit reluctant to trade it, but I've realized that basically removing everything that I'm not really, really good at, or that's making me a lot of money, or has a good risk-reward ratio, it's just better not to do it all, because not just does it not make me that much money, or oftentimes it makes me lose money, it hurts my confidence. So when the good frontside setup comes up, then I'm already might be in a blown confidence and not be able to take advantage of the front side. So I really, really, really need to stop trading the range and the backside. There's really no point for it. It's that simple. I'm not really sure when it's going to click, but I've been getting better at it. And a good example for that is if we click on each one of these individually, you'll see that the front side, I have 355 trades. On the ranging, I only did 2 trades, and the backside, I did 5 trades. So I've already reduced the amount I'm trading in those individual setups, and that's already some pretty good progress. So let's go ahead, talk about these tickers, and we'll start with the largest winning trade. Okay, so let's see. Ticker TBLT, it was a long front side, classic. More information here. Well, I actually wrote a lot. I usually don't write this much about one trade. Max cost, so this was a pretty decent position size, $19,000. Notice this, it's not even a big winner. So I make most of my money just from taking a lot of scalps, a lot of base hits. That's really how I do it. Every time I look for that home run trade, I always get whacked. I'd rather take my profits and then rebuy. It works much better for me. Otherwise, I just trip over myself and overthink things, which is just stressful. And this trade has a ridiculous amount of transactions. Usually there's not this many. Looks like there's a lot of partial fills as well. That's probably why. But the first entry was at 7:43 a.m. Let's quickly look into this one. So this is my bread and butter setup for sure. 7:43 is basically into this flat top breakout. And then it looks like I trade this one aggressively here. And I don't really get to exit all my size. And let me just scroll down and look at this picture, because it looks like this one is just easier to see because I don't have my trades documented, and that's why I posted this picture as well. So yeah, we had a nice breakout here. Good. Well, the volume was a little bit light, so that's probably why I was a bit skeptical on this trade. But look at this, nice big breakout. If you scroll down to the 5-minute, you'll see a 5-minute breakout. So we have a 1-minute pullback, and I'm just trading this one, and this is where I'm trying to get more and more aggressive. This is how I make the big profits. This is my front side strategy. We got the 5-minute on the front side. We got the 9 EMA on the front side. I literally have a whole entire video where I just dive into my basic strategy. I get a bird's eye view of it. I'll link it right here, right now, somewhere in this video. And that way, for everyone that's interested in taking that deep dive, you can check out that video right now. But I just want to give you guys an overview of this is one of my best trades of the month because I was doing exactly what I was supposed to be doing. Front side pattern, big breakout. Volume wasn't beautiful, but hey, we still had some room to run here, and there was really no reason not to trade this one. Also, the intraday volume a little bit sketchy where we're making new highs, but the volume is fading here a little bit compared to these highs. So not the most beautiful volume, but overall really, really nice price action. So I'm really happy that I traded this one, and it makes a lot of sense how this is my best trade. But at the same time, I feel like there's a lot better moves in June. So it's also kind of surprising that this is my best trade. Moving on to the biggest percent winner. This is actually kind of a ridiculous one. Here it is. And the reason for that is I only made $19. This was a sub dollar. I don't like trading sub dollars usually. And I just go in here, I get a partial fill, and it pops up, and I just take my profits. And that was pretty much the last time I traded this ticker. Although there was maybe a little bit more opportunities, especially here on the break at VWAP around 10 o'clock. This could have been a trade as well. I'm not sure how I would have traded this one. Could have been an opportunity too. But yeah, just classic front sides. That's what it's all about. The risk reward is quite nice because you have that potential for a big breakout and continuation, and your downside is limited by your stop, which is going to be around the 9 EMA on the 1 minute. All right, let's keep going here. And now let's check out the largest losing trades. We got the first one right here. Negative, this is a big loss. Negative 1.270. That's a pretty serious loss in just one trade. That's my max loss in the day, anything over $1,000. I had a pretty decent size on this ticker. I'll zoom in a little bit more. But the percent here was a pretty solid loser, that's for sure. First entry was at 8:45 a.m. Eastern Standard Time on EVOK. 8:45. Let's look at this one. So that's here in this flush. Yeah, that's disgusting. So I was trading the front side here on this ticker, and then I traded this one last move. I was probably thinking there was a little bit more room to run here before major resistance, but I've seen this ticker or this exact setup time and time again where you think there's a little bit more room to run, and then you get whacked in this move. This is pretty risky here. Sometimes it's a little bit better to actually buy into the breakout. Looks like I sized in and I didn't cut my losses quick enough, so this was a little bit painful. I honestly just still hurts to look at this trade. I remember that I was actually up quite a bit on the EVOK, like $600-700, and then all of a sudden I was pretty much the same in the red, and I was like, ooh, that was a pretty serious loss. It didn't stop me out for the day, so I was able to keep trading because I was already in the green. But you got to watch out when the front side's over. Sometimes it's over very quickly. And also look at this big volume coming in right here. That's not very nice. So a big thing actually with trading front side is it's okay that your last trade is red because you want to keep trading it until the stock proves that it's no longer on the front side. You don't want to get in your own way by stop trading it and guessing it. But sometimes a ticker is definitely extended, and what you can do is start reducing your size. So when the inevitable flush or the failed breakout or continuation happens, you might lose, but you don't lose that much. That's how I usually go about these things. This was just FOMO. I sized up way too much here. Actually, it was more revenge. I was really revenge trading here because I didn't size up enough on the front side, and then I was trying to revenge trade here by sizing up finally, and then this one didn't work out. That was a classic revenge kind of FOMO setup right there, where if you don't take advantage of the first trades, you're going to have FOMO. You're going to take that last trade for no reason, too extended, too big size, and you're going to get whacked. And that's exactly what happened here on EVOK. And the biggest percent loser, let's go ahead and check that out. That's CNSP, only down $143 on this one, probably just smaller size. Yeah, smaller size percent though is pretty serious. My first entry on this one was at 8:38 a.m. Eastern Standard Time. So let's look at that really quickly here. And yeah, you'll see I basically top ticked this one a little bit. We had a breakout. I was trying to buy into this one. I just got flushed on. This is a classic sub-dollar where this is why I don't like really trading these, because it's just sometimes they flush so hard and all of a sudden it's down like 10% and you're just like, what just happened? So I feel like these tickers are high risk. And, you know, the reward on it is even questionable because I can't oftentimes size into these with enough money. And even if I do, then the risk just gets really high. So I'm not super comfortable with trading these sub dollars. I'll probably reduce trading them in a way, but hey, if there's a good setup and a good volume, I'm going to go for it because we've been seeing pop up more and more, and I don't want to just not trade a certain group of tickers for no reason. But yeah, just know they are a little bit sketchy. And then the last trade I want to talk about that is not here, but it's part of my right here, my backside. Let's let that load. It's my backside biggest loser. And this is disgusting because this trade should have just never happened. Boom, here it is. And this was a failed red to green move as well. Usually I won't be trading backside this aggressive, but I should have never been trading this one. And this was right at the market open here at 9:31. Pretty decent size. Let's go ahead and look at this trade. Market opens on this one and you can just see it sells off. I actually start sizing into this one looking for that reversal. So what I was doing wrong here is we're on the backside. We're below VWAP. We're below the 9 EMA on the 1 minute. We're above it on the 5 minute, but overall it's a backside move. And I'm starting to size in right here looking for a reversal. So I'm trying to guess what a ticker is going to do. I'm trying to time the reversal. I'm trading the backside. It's never a good setup because at best you'll get a little pop, but at worst you're going to continue riding this ticker down. So the risk reward is negative on the backside, unless you're shorting, obviously. So I really should have never traded this one. A ticker like this or a trade like this, it messes my confidence up, and it can have ripple effects into the next day. That's why trading stuff like this is extra bad, and I just should have never done it. If I never done it, it would have been an $8,000 month, or maybe it would have been a much better month, because not just would have been minus this trade, it would have been like potentially more focus, more confidence on a bunch of other trades. And that's why it's so important to stick to your main strategies, stick to your bread and butter, and just stop doing everything else. And when I did that for myself, I've become a much better trader for it. And I think it could work for you as well. And you can see I still make these mistakes, but I've drastically reduced how much I have been making these mistakes. There is one more thing I wanted to share with you guys, and let me hide my trading volume, but I did have 2 max red days this month, which, is sometimes inevitable. But if you check out my running P&L, I feel like these 2 red days could have been a little bit avoided. So the first one was here on the 22nd, where I was doing like not really that great. I was having a hard time, getting green. I was treading water, and right around this area at like 9:48, I was all ready to throw in the towel. But I had such a red state of mind. Like I was just like annoyed that I basically forced myself into a max loss. So when I'm in those situations where I'm not doing that great, I'm not in a flow, it's already almost 10 o'clock, it might be better just to walk away, because yes, maybe I'll make a little bit more money, but there's a good chance at that point, when it's not my ideal trading time, I'm kind of annoyed, I'm exhausted, there's other things on my mind, I'm more likely to make a mistake, and these red days can have a lot of ripple effects as well. So what I'm trying to do is I'm trying to reduce the tail end of the bell curve, the losses. Let's say these are the losses, and I'm trying to reduce that and focus on the wins as much as possible. So that's really the focus here of this video. And obviously the whole point of this video is really focusing on that, reducing what's not working, and that's primarily the range in the backside, like we've been talking about, but then also just noticing when you're not in a good state of mind. There was another time on the 27th, I hit my max loss on the day, and look at this. This is just a trend to the downside. Sometimes I'll be trending where the more I trade, the more money I make. Those are really my best days. And then here you can see, like, I should have just called it. I was already just going down, 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 and down. I kept on trading and kept on getting more and more in the red. That's why you have a max stop on the day, because if I never had a max stop on the day, imagine I just keep trading. Eventually you're down 2,000, then 3,000, then 4,000, then 5,000. So you want to limit your max you can ever give back. I think that is like one of the most important rules that every trader should live by, without a question. If you want to learn more about documenting your trades and how to use Trade Journal, check out tradejournal.co/start. And if you want to learn more about my specific strategy, come down here and check out my day trading course. It's totally free to start. I also have my slides and checklist PDF right here. And if you want, we can get on a one-on-one, totally free, but for a limited time call where we'll talk about your strategy. I'm trying to get on a call with as many traders as possible to learn more about what you guys are up to, what your guys' biggest struggles are, and to learn what kind of content would help you guys the most. So click right here and you'll learn how to get on a call with me. Also, don't forget to join our Discord where we're trading every single day the market's open. I'll see you there, guys. Don't forget to drop a like on the way out. And if you're new, consider subscribing. We'd love to have you part of this community. Like always, stay safe and make some awesome trades. Ciao, ciao.